For patients with psoriasis, eczema, or seborrheic dermatitis, steroids are the go-to. They can work, but they come with a long list of warnings, skin thinning, stretch marks, and the fact that you can't use them long-term or on sensitive areas like the face. Patients are forced to juggle multiple creams, carefully timing their use to avoid side effects, living in a constant cycle of flare-ups. But what if that entire paradigm was finally shifting?
Biotech breakthrough stuns medical world. This is the pill that could change everything.
Today, we're diving into Arcutis Biotherapeutics, ticker ARQT. This isn't a story about a future promise. It's about a company that is already here, actively disrupting the 70% market share that steroids hold. Their lead franchise, Zoryve, isn't just another drug. It's becoming a Swiss Army knife for dermatologists, and their commercial performance is nothing short of spectacular. Let's break down how Arcutis is executing flawlessly, the massive growth runway ahead, and whether this commercial success makes it a compelling investment today. So what is the engine behind Arcutis' success? It all comes down to one molecule, roflumilast, which they sell under the brand name Zoryve. Zoryve is a highly potent, once-daily, steroid-free topical cream and foam. It's a next-generation PDE4 inhibitor. Now, the mechanism isn't new, but Arcutis' formulation is. They've created a product that is both powerful and exceptionally gentle, allowing it to be used anywhere on the body, including the face, eyelids, and even skin folds, and for as long as needed. And this completely changes the treatment equation. Instead of a short-term steroid blast, dermatologists can now prescribe a single safe foundational therapy. Arcutis has masterfully developed Zoryve in different strengths and formulations. The cream is perfect for atopic dermatitis and plaque psoriasis, while the elegant foam formulation is designed for hair-bearing areas, making it ideal for seborrheic dermatitis and all-scalp psoriasis. And this versatility is why the company calls it a Swiss Army knife for inflammatory skin conditions. But the real question is, are doctors and patients actually buying into this new paradigm? Nowadays, you can just go on TikTok, type in Zoryve, and see the results yourself. But let's find out. The answer to that question is an emphatic yes, and the numbers are stunning. In the second quarter of 2025, Arcutis reported net product revenues of $81.5 million for Zoryve. That's a 164% increase compared to the same quarter last year, and a 28% jump from last quarter. This isn't a fluke. This growth is driven by pure demand. In Q2 alone, nearly 200,000 prescriptions were filled, and the company recently surpassed the 1 million total prescriptions mark since its first launch. More than 18,000 doctors wrote a script for Zoryve in the second quarter. This isn't a niche product. It's achieving broad adoption. What this data shows is a fundamental shift in the market. As CEO Frank Watanabe stated on their earnings call, they are seeing the progressive conversion of topical steroid prescription to Zoryve. And while the steroid market remains flat, branded non-steroidals grew by 40% year over year, and Zoryve is leading that charge. This is the wow moment. Not a clinical trial result, but the real-world proof that their strategy is working at scale. So, how much bigger can this get? The growth runway is immense. The company highlighted a critical statistic. Last year, 69% of all topical prescriptions in their approved indications were for steroids. Every percentage point of market share they convert from steroids represent a substantial revenue opportunity. But Arcutis isn't just relying on the existing market. They have a multi-wave growth strategy. Now, what are these waves? Well, what is the strategy? Well, wave one is pediatrics. Atopic dermatitis or eczema affects nearly 10 million children in the US. Parents are extremely hesitant to use steroids on their children. Arcutis has a PDUFA date of October 13, 2025 for Zoryve cream for children aged 2 to 5. This is a population of roughly 1.8 million patients and represents a huge unmet need. They've even started a trial in infants as young as 3 months old. Now Wave 2. Wave 2 is life cycle management. The company is already enrolling phase 2 proof-of-concept studies for Zoryve in vitiligo and hidradenitis suppurativa or HS. And this is based on feedback from doctors who are already seeing positive results off-label. This is a smart, capital-efficient way to explore new multi-billion-dollar indications. And now, Wave 3. Wave 3 is the pipeline. Arcutis recently submitted an IND for ARQ-234, a potential biologic treatment for atopic dermatitis. While still early, this shows a commitment to long-term innovation beyond Zoryve. It is exciting that doctors are prescribing off-label, they're going for new indications, but who's management? Who are they? And of course, executing this strategy requires a world-class team, and Arcutis appears to have one. The company is led by President and CEO Frank Watanabe, who has steered the company through 5 successful FDA approvals in just 3 years. Now, he's supported by Chief Medical Officer Dr. Patrick Burnett, who oversees the smart and efficient clinical strategy, and then Chief Commercial Officer Todd Edwards, whose team is responsible for the flawless commercial launch and execution. What stands out from their earnings call is a culture of discipline. They are data-driven, as shown by their decision to halt development of a less promising asset, ARQ-255, to focus money and resources on higher impact programs. And this is exactly what investors want to see. So now let's get to the fun part. Let's get to the numbers. A great story is only a great investment at the right price, right? So first, the balance sheet. As of June 30th, 2025, Arcutis had $191 million in cash and marketable securities. Their net loss for the quarter shrank dramatically to just $15.9 million, down from their $52 million the year before. Most importantly, the company is rapidly approaching profitability. They are on track to achieve cash flow break-even in 2026. This is a critical inflection point that few biotech companies reach. It means the existing business will soon be able to fund future growth initiatives. Their total debt stands at a manageable $108 million. Now, these numbers look great. How do we value Arcutis? Now, let's run 3 scenarios based on their current trajectory and their Q2 weighted average share count of 127 million shares. Number 1, the bear case. Growth slows due to competition or reimbursement headwinds, particularly with Medicare Part D, which remains a challenge currently. Peak sales stall around $1 billion. The value could be closer to $3.5 billion or a share price of approximately $27 per share. The base case is Arcutis continues its steady growth, successfully launches in pediatric atopic dermatitis, and reaches $1.5 billion in peak annual sales. Applying a 4 times peak price to sales ratio, standard for a profitable specialty pharma company, suggests a future market cap of $6 billion. This translates to a speculative share price of roughly $47 per share. Now, if everything goes extremely well, the bull case. The steroid conversion accelerates, and their lifecycle management is a huge success. With Zoryve gaining approval in indications like vitiligo in the future, peak sales could reach up to $2.5 billion. Applying a higher 6 times price to sales ratio multiple for a best-in-class franchise gives us a future market cap of roughly $15 billion. This implies speculative share price of around $118 per share. That would be nice, right? This brings us to the final verdict on Arcutis Biotherapeutics. The bull case is very powerful. This is a story of superb commercial execution. They have a differentiated, best-in-class product that is rapidly taking share in a massive market. They have a clear multi-wave growth strategy and are on a direct path to profitability. The bear case centers on sustaining this momentum. Can they overcome the Medicare Part D hurdles? Will competition intensify? And are they too reliant on a single franchise, Zoryve? For investors, Arcutis represents a de-risked biotech story. The question is no longer if the drug works or if it will sell. The question now is how big it can become. With the pediatric launch on the horizon and a clear strategy for continued dominance, Arcutis is a company that has moved from promise to performance. And as always, this is not financial advice. The valuation scenarios are speculative and based on numerous assumptions, as you've seen. You should always do your own research and due diligence before making any investment decisions. I would love to know, what are your thoughts on Zoryve's dominance and Arcutis strategy? Let me know in the comments below. Thank you for watching. Don't forget to like, subscribe, and I'll see you in the next one.